All right, so Apple's recent announcement of a record-breaking $110 billion stock buyback has sent shockwaves through the tech community, with many investors and analysts weighing in on the move's implications for the company's future. The buyback news was accompanied by a 4% dividend hike to $1 annually and thus 25 cents quarterly, which further solidifies Apple's commitment to rewarding its investors. But is this a good thing for a quote unquote innovative tech company? Let's dive in. If you're new to my channel, then hey, my name is Cameron Galbraith and I am a finance professional here in New York City. This Apple buyback is a story that has been taking the finance space by storm. And because of that, I wanted to seek out the truth and understand why there is such a divide in whether this news is good or bad. The market reaction to the buyback announcement was immediate, with Apple stock surging 6% in extended trading hours and lifting its stock market value by over $160 billion. This significant increase in value is a testament to the power of stock buybacks in influencing investor sentiment and driving up share prices. In the days following the announcement, Apple stock continued to rally, with shares climbing 6% on Friday after the iPhone maker announced this record-setting buyback program. And just in case you're wondering how record-breaking this buyback is, the second largest buyback in market history was set 6 years ago by, drumroll, Apple, when they authorized $100 billion in share repurchases. But for context as to how crazy big this is, the third largest buyback in history was by Chevron for just $25 billion in buybacks in 2019. And this process took them over 4 years to complete. However, despite the buyback and dividend news, some analysts have raised concerns about Apple's growth prospects, suggesting that the company's focus on returning value to shareholders through buybacks and dividends may be masking underlying growth issues. This perspective is supported by the fact that Apple stock has failed to reach new highs, remaining within a narrow range of approximately $160 to $200 for the last year, and that the company's growth rate has dwindled with few prospects for significant expansion in the near term, especially with everything going on in China. Apple's stock performance this year has been lackluster compared to its tech peers. While Apple saw a nearly 50% spike last year, it did lag behind other tech giants like Nvidia and Amazon. The company's shares tumbled earlier this year amid analyst downgrades, causing it to lose its title as the most valuable company in the world to Microsoft. Critics have accused Apple of lacking a clear AI strategy, which contrasts its competitors' aggressive investments in the technology. And as I just alluded to, in the AI and LLM advancements, Apple is seen as lagging behind other tech companies. While Apple has made significant strides in AI research, such as its practical solutions to technical AI issues that other firms appear to be ignoring, it has been criticized for not being at the forefront of AI innovation. The company's approach to AI has been described as slower compared to competitors like Alphabet, Microsoft, and Amazon. Apple's focus on local AI models and licensing these LLMs could be a winning strategy in the long run, but it still lags behind in terms of developing its own proprietary LLMs. This is where I've seen people have the biggest issue with the buyback. If a company has enough cash on hand to execute a $110 billion buyback, should they instead choose to use that capital to invest in their AI capabilities, especially when they're considered to be lagging behind their competitors in the space? Some are saying that this is Apple saying goodbye to being a growth stock and instead settling down as a value stock that pays a strong dividend. But we shall see. The upcoming June event will be closely watched for signs of Apple's strategy to integrate AI into its products and drive some needed sales growth. Investors are eager to see how the company will monetize its AI initiatives and translate them into long-term revenue growth. So, in conclusion, Apple's record-breaking $110 billion stock buyback is a significant move that has sent strong signals to investors about the company's commitment to returning value and its confidence in future prospects. And while the tech community may have mixed reactions to the buyback, it is clear that this move is a strategic decision aimed at driving up shareholder value and solidifying Apple's position as a leader in the tech industry. I'm curious what you think. I'd love to hear your comments down below. And with that said, thanks for watching. If you want to see other content just like this, make sure to subscribe to this channel. Also, connect with me on LinkedIn if you have any questions at all. I'll see you in the next one. Peace.